Okay, welcome guys. It is what is today? Wednesday the 6th, 6/11, Wednesday, June the 11th, in preparation for Thursday, June 12th. We're going to start with the Larry Height in Respecting Risk on the Market Wizards interview with top traders by Jack Schwager. I'm going to try and go through this fairly quickly, guys, because I know there's a lot of stuff in here I wanted to go over with Larry Height. Height's philosophy was to aim for the best growth rate consistent with extremely rigorous risk control. Um, one of the questions that was asked, and then part of the answer is not having a financial background. I was unfamiliar with the term blue chip, but it sounded odd to me in the context of a stated investment firm. So after the interview, I looked up its derivation. I found that the origin of the term could be traced to the color of the most expensive chip in Monte Carlo. I said to myself, ah, now I know what this game is all about, gambling. So I threw away my copy of Graham and Dodd Principles of Security Analysis, considered by many to be the Bible of the stock market analysis, and I bought a book called Beat the Dealer. I came away with the idea that successful investing was really a matter of odds. And if you could compute the odds, you could find and test methods that could beat the market. Swagger asks, what made you believe that you could develop methods to put odds in your favor? Larry Height says, I do not know that I understood it all then, but over the years, I came to realize that the markets are inefficient. I have a friend who is an economist. He would always try to explain to me, as if talking to a child, why what I was trying to do was futile, because the markets are efficient. I have noticed that everyone who has ever told me that the markets are efficient is poor. He argued that if I could develop a winning system on a computer, then so could others, and we would all cancel each other out. What's wrong with that argument? Asks Swagger. Larry Height says, because if people develop systems and people will make mistakes, some will alter their system or jump from system to system as each one has a losing period. Others will be unable to resist second guessing the trading signals. Um, and I have, if you have the signal and the signal's there, then take it. Okay, let me skip over a little bit here. Um, well, I forget what the original question was back here. Possible markets change. The futures will be very different from the past. Okay, so uh, Larry Height gives long answers, so page and a half into that. He said, insurance business provides a perfect analogy. Take one 60-year-old guy, and you have absolutely no idea what the odds are that he will be alive 1 year later. However, if you take 100,000 60-year-olds, you can get an excellent estimate of how many of them will be alive 1 year later. We do the same thing. We let the law of large numbers work for us. In a sense, we are trading actuaries, like the casino effect. I have a friend who went broke trading futures. He cannot understand how I can trade by following a computerized system religiously. We were playing tennis one day and he asked me, Larry, how can you trade the way you do? Isn't it boring? I told him, I do not trade for excitement. I trade to win. Um, Swagger asks, how have you been able to achieve return risk ratios far above the industry average? Because we know that we don't know. No matter what information you have, no matter what you are doing, you can be wrong. I have a friend who has amassed a fortune in excess of 100 million. He taught me two basic lessons. First, if you never bet your lifestyle from a trading standpoint, nothing bad will ever happen to you. Secondly, if you know what the worst possible outcome is, it gives you tremendous freedom. The truth is, while you cannot quantify reward, you can quantify risk. Buddy, we were talking about that today. You can't limit or quantify what your reward will be, but you can always minimize your risk. You can always quantify your risk. Um, I will give you an example of how important this advice is. One of the world's largest coffee traders invited me to his house in London. When I walked into his library, I noticed that he had just about every book ever written on power. He took me to one of the finest restaurants that I've ever been at. At dinner, he asked me, Larry, how can you know more about coffee than me? I am the largest trader in the world. I know where the boats are. I know the ministers. You're right, I answered. I don't know anything about coffee. In fact, I don't even drink it. How do you trade it then? He asked. I told him, I just look at the risk. Well, this great meal this great meal lasted for several hours. 5 times he asked me what I did, and 5 times I told him I manage the risk. 3 months later, I heard that he had blown $100 million in the coffee market. He obviously did not get the message. And you want to know something? He does know more about coffee than I do. But the point is, he did not look at the risk. I feel like that's one of my downfalls, guys, and I'm asking all of you guys to help me with that, to minimize that risk, to cut it out before it hits my daily drawdown. All right. So the very first rule we live by at Mint Trading, which is Larry Height's brokerage firm, never risk more than 1% of total equity on any trade. By only risking 1%, I am indifferent to any individual trade. Keeping your risk small and constant is absolutely crucial. For example, one manager I know at a large account withdrawal, instead cutting position. Okay. Risk is no fooling around game. It does not allow for mistakes. If you do not manage the risk, eventually they will carry you out. The second thing we do at Mint is always follow the trends. We never deviate from our methods. You can lose money even on a good bet. If the odds on a bet are 50-50 and the payoff is 2-1, then that is a good bet, even if you lose. The third thing we do, I'm skipping through some points here, skipping through some of the paragraphs. I'm just kind of going over some of my highlighted stuff here. The third thing we do to reduce risk is diversify. We probably trade more markets worldwide than any other money manager. We don't just use a single bet system to provide balance. We use a lot of different systems ranging from short term to longer term. The fourth thing we do to manage risk is track volatility. When the volatility of a market becomes so great that it adversely skews the expected return ratio to risk, we stop trading the market. Essentially, our approach has 3 lights in determining the acceptance of trading signals. When the light is green, we take all signals. When the light is yellow, we will liquidate an existing position on a signal, but we will not put on a new position. Finally, when the light is red, we liquidate existing positions automatically, and we do not take any new positions. Dr. Elder wrote a book, and I've got it in there on my shelf. It's one of the ones I kept, about having the lights, the red light, yellow light, caution, and then green light, go. And Dustin, that's kind of like your red green cross signals there. For example, in '68, when coffee went from $1.30 to $2.80 and back to $1, we got out of our long position on the way up at $1.70. We did not trade the market for the rest of the price climb, nor the subsequent collapse. The speculator can choose to only bet when the odds are in his favor. This is an important positional advantage. That's huge. So we'll stop there for today, and we will pick back up tomorrow with more of Larry Height. Like I said, he has long answers that his answers go on for multiple paragraphs at a time, but I think he's got some awesome things to bring to the table there. Okay, on the 60-minute .D chart here, you see we have the gap below from the other day on the .D. We have multiple other gaps that are showing below that we've highlighted over the past. But the closest one is right there, as you can see. I did want to point out this is on the 60-minute .D. Our LBR, that pattern where things are still up, even though we closed down here a little bit today, we basically just came back down here a little bit below the 60-minute moving average. And then we, at the close of the day, we kind of started moving, back up. Then I wanted to show the regular 60-minute. It's over here on this one. Okay. Yeah, I wanted to show this here. Yeah, you can see we're still up here. We finally started rolling over. So now this gives us a opportunity to look for that potential shorting plays here. You can see that today it did what I was anticipating. I kind of ate myself up here, trying to force this to happen. Obviously, I don't have enough power to swing the market like that, but we broke below that 60-minute 20 period moving average, broke below it, came back up, tested right near it, only to fail into the afternoon, further into the afternoon there. So it's good to see that did play out there finally. That break, wait for that check back up or look for signals up in there. I also wanted to show the 120-minute here. So this is on a 120-minute version. So we do have, we still have that same pattern in the 120, even though we're kind of coming out of it in the 60. Looks like we're starting to come out of it here in the 120. Just wanted to be aware of that. We can check back the moving average. Okay, and then the VIX, wanted to pull this over here on the internals. So the VIX, it did this morning when prices were staying up, we were pushing down here pretty far on that VIX. Eventually, we did close out the day with that true divergence, and we kind of closed down on the day. So that's something to be aware of. Also here on the potential overhead resistance zone, that I'd pointed out here. This is the SPY down here below. I was pointing out this potential overhead resistance where we had a lot of price overlap. We kind of came up and touched right into that area. Today, the high was 605.06, and I had 605.23 as kind of a general area. It wasn't specific, but it's interesting that we got pretty darn close there. So, will we come back up here and test this again? We could. There's still potential for that, or we could just turn from here and go back down. So we'll keep an eye on that tomorrow. On the 1440-minute chart, did want to show this. So this is this latest candle here. This is today or tonight's Globex session, but this is where we closed here. So you can see that we basically still closed over the tops of these other points. And right now, even with the Globex session, we're coming in here and checking resistance here. So, it'll be curious to see if we bounce off this 59.85-ish zone, could come back down into a little bit before coming back up. But that is a potential. We still have that 2-period rate of change, and that way down that I called, was telling about yesterday. We've pushed up above yesterday's highs on our further divergence here on the 2-period rate of change. Okay, I wanted to show the 65,000 tick chart here. This is the Globex gap here, real-time trading hours. This is not, I'm sorry, Globex and real-time trading hours. So this is a legit gap here. That was that Asians Gone Wild where it just jumped up and spiked up there. However, you look, so we have that down here below that we could try and move it down into. However, if you look at these spikes, and that's what I was showing you on that daily, you can see it here pretty clearly on the 65,000 tick chart. Move up into here, move down, move up into here, move down, move up, had some good price overlap, move down. So I'm kind of monitoring this zone here. We've got quite a bit of price overlap, that you can kind of draw a line through here. A lot of this price overlap here. So I can see us kind of moving down into here. I don't know that we'll just slice right through this and continue on down here right away. But just be aware that we do have a lot of price overlap here that could act as a little bit of support or some choppiness tomorrow. So we want to be aware of that. I can see people shorting, into the afternoon, into this afternoon, may try and short in the morning, only to have us kind of hold up and do the same thing we've been doing over the last couple days. Okay, final thing I wanted to show you here on the internals was the tick chart. And it's more so just this line, the line chart here on the SPY, that overhead resistance, So this is, I pointed out some potential support areas below, but this is the SPY. You see that we have the move up here, the, price overlap. Well, we stopped almost about halfway in what I had drawn out as a box. doesn't mean anything necessarily. You know, we kind of came in the middle of this price overlap here. We're kind of turning, you know, could we come back up and test back up into there tomorrow? Absolutely. That's absolutely possible. You know, and I pointed out if we turn down, there's other price levels that we could meet a little bit of support on. So you know, just be cautious, especially in the morning, while the market's trying to figure out what it's going to do. All right, guys, happy trading. Be safe tomorrow. Let's all continue to help each other. I think we can continue helping each other grow on this. And then, oh, there was something Dustin asked me to go over, but maybe we can go over that in the morning. Help me remember, Dustin. I think you were asking about the Brightstein plays. So if there's a lull in tomorrow's price action, maybe we can go over a little bit of that. All right, guys, have a great one. Safe trading tomorrow.